Hello, my name is Carl Williamson. I'm the manager of the Nexus Global Solutions Portfolio and the Nexus Global Dynamic Portfolio. It's November 2023 and I'm speaking to you from the London offices of Quilter Cheviot. The Nexus Global Solutions Portfolio was down 2% during the month, while the Nexus Global Dynamic Portfolio was down 2.4%. Globally, equities continue to struggle to make headway in October, given the growing acceptance by investors of an environment of higher for longer interest rates. The outbreak of war in the Middle East has clearly dominated headlines during the past few weeks. While clearly this is a humanitarian crisis, the impact on markets so far has been fairly limited. As you might expect, the initial reaction was a spike in the oil price, while gold has also been higher on safe haven demand. However, impact on broader financial markets has been fairly limited. An increasingly prominent theme of late has been US fiscal sustainability, with some investors becoming concerned about the high levels of debt in the world's largest economy. This has also helped to push interest rates higher. At its penultimate meeting of 2023, the US Federal Reserve voted to keep rates unchanged at the range 5.25 to 5.5. Chairman Jerome Powell indicated that this decision was in part taken because higher bond yields were having a restrictive effect on financial markets. Meanwhile, Bank of England rate setters voted to keep rates at 5.25% for the second consecutive meeting. This time the vote was 6-3 in favour, higher than the 5-4 in favour we saw last time. However, the Governor of the Bank of England did make some hawkish comments following the interest rate decision. Overall, just over 80% of US companies have reported quarterly earnings. Of these, just over 80% have reported earnings that came in above expectations, which is above the 5- and 10-year average. The blended earnings growth rate, which looks at the earnings growth of those companies that have already reported, along with those that are due to report, is currently running at 3.7%. This is higher than the rate that had been expected at the end of the quarter, which was minus 0.3%. Notable performers in the month included Netflix and Microsoft. Both companies delivered earnings reports during the month that were well received by markets. Economic data continues to be of utmost importance, with more focus on gauges of activity and employment as opposed to inflation data. There have been some signs of weakness in the US, including the most recent jobs data that was received early in November. This, along with a dovish update from the Federal Reserve and news that the US Treasury was going to sell less long-term bonds, have caused a fall in yields in November. This has helped support risk assets during the month, and so far in November both funds are up by around 2% at the time of filming. It's been my pleasure to speak to you. I look forward to speaking to you next month.